Bitcoin, hard assets, real estate, equities, I think will all kind of perform well, at least sectors of the equity market. And people need to really protect themselves. Fed's going to step in. And what happens then is that actually increases the money supply.
Bitcoin reserve is one of the ways that the U.S. could, start to balance out the dollar relative to other currencies, is say, we're going to accumulate a lot of Bitcoin. Should we later need to backstop our dollar? We have that option now. But while you're accumulating it, depending on the method of accumulation, that can actually be dollar weakening.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Lyn Alden and Sam Callahan dive into Bitcoin's fixed supply, government spending ties, value proposition, and emerging market reliance. Explore Bitcoin's bullish structure, scarcity, and future. Watch to learn more now.
Ironically, one of the ways that a country weakens its currency when they think it's too strong is to accumulate reserves, which they can then use later to defend their currency should they consider it too weak. And I've written a lot about how the current structure of the dollar system, prolonging the strength of the dollar actually has some disadvantages. The way that it currently works, in order to maintain this big saleable currency that the whole world uses, it means the whole world, they all demand dollars, so they all have to get dollars. And how do they get dollars? For the most part, the U.S. runs a structural trade deficit and pours dollars out into the world. And a lot of that is self-correcting in the sense that because the whole world needs dollars, there's a lot of demand for dollars above and beyond normal things that currencies trade on, which is like interest rate differentials, trade balances, things like that. So in addition to all those forces, the dollar has this extra layer of demand that other currencies don't have, and which sounds great, except for the fact that the cost of that is that basically the dollar is perpetually overvalued based on a lot of these things. And so our import power is really strong. Our export power for lower margin goods is fairly weak. And when you run that playbook for decades, and a lot of it is like a self-reinforcing playbook, then the downsides of that start to become politically front and center. So the reshoring and the hollowing out of the industrial base, whether you look at, if you're the DoD and you're looking at it from a national security angle, that's an issue. Or if you just live in the Rust Belt, and which is really shifted in politics lately, and it is responsible for some of the political changes we're seeing, the rise in populism, it's because of that hollowing out. So on one hand, having the dollar positioned how it is lets the government run bigger deficits than they otherwise would. Like right now, Brazil's having an issue because of their fiscal situation, even though their deficit as a share of GDP is roughly what the U.S. is. But they don't have this like entrenched, inflexible forward demand for their currency, so they're facing kind of immediate consequences for it. The U.S. really gets to delay those consequences, keeps the train going for a very long time, which if you're the government you'd like, and you can sanction almost any country in the world. So those are like the benefits from being the global reserve currency issuer, but the cost is you're exporting your industrial base to basically maintain that. That's kind of the ongoing cost of doing it. And during the Cold War, probably the trade-off was worth it. But now in the current time, as the imbalances have accumulated, the other things are front and center. So the average American says, I don't care if America can sanction country XYZ, I want my manufacturing job back, right? So the downsides are getting interesting. So ironically, a Bitcoin reserve is one of the ways that the U.S. could, start to balance out the dollar relative to other currencies, is say, we're going to accumulate a lot of Bitcoin. Should we later need to backstop our dollar? We have that option now. But while you're accumulating it, depending on the method of accumulation, that can actually be dollar weakening, ironically, which is in the grand scheme of things, one powerful moving part in this whole trade issue. So I think there's more layers than people often talk about.
Jack Dorsey recently shared a brief AI-generated clip that has stirred lively discussions among cryptocurrency enthusiasts. The 4-second video shows Michael Saylor, a staunch Bitcoin bull and MicroStrategy chairman, celebrated in visuals that honor Bitcoin. Clad in symbolic armor, he leaps into the air and unexpectedly transforms into an XRP emblem upon landing. This surprising twist has sparked intense debate. Many viewers wonder if the metamorphosis hints at a hidden shift in ideology, or if it is intended as playful satire. Some XRP supporters see it as a subtle endorsement, while critics argue that it might simply mock Saylor's long-held Bitcoin loyalty. Analysts note that Saylor has openly dismissed XRP before, raising questions about his true stance. With opinions divided, the crypto community is left speculating whether this video marks a significant change in digital asset narratives or is merely an artistic expression. Dorsey's decision to keep the clip live on the decentralized platform, Primal, only deepens the mystery and fuels the ongoing conversation about future crypto alliances. Mystery endures.
A long end of the yield curve, they have to find the demand. And the foreign investors have been declining in terms of the percentage of ownership of treasuries over the last decade, I think from 46% to 30%. And most of it's been picked up from households and domestic institutions and banks. And there's things that they can do, like change the reserve requirements for the banks to try to create more demand, like kind of artificially. But they have to make sure that doesn't get out of control, that the interest costs don't explode, because then it will really get the deficits to blow out if we lose control of the long end of the yield curve. And so what we're looking at here is like, who's going to buy it? And so personally, I think what's going to happen is we're going to get back to QE. I think the Fed's going to step in. And what happens then is that actually increases the money supply. And so increasing the money supply, you should expect more currency debasement, more asset price inflation, and things like that, because I think the Federal Reserve is going to have to step back in eventually at some point over the next decade to stop, to add some demand to the long end of the yield curve to help finance these deficits that, as we mentioned, are structural in nature. It's going to be very difficult to change them. And so you should expect currency debasement, increase of the money supply, more asset price inflation, all those things that we talked about. You should just expect that to continue, and the economy might run hot. And so in that situation, obviously, Bitcoin, hard assets, real estate, equities, I think will all kind of perform well, at least sectors of the equity market. And people need to really protect themselves. And, I think other nations have it a lot harder. I mean, Lyn mentioned the UK gilt crisis, but also the ECB, I mean, what's going on right now, even, they have this instrument called a TPI that they announced in 2022. And it's because they're trying to fight inflation and trying to raise interest rates, but all of these countries have different levels of debt, and they're also blowing out their deficits. And it's just like the early 2010s where you had the Greek financial crisis, the debt crisis. But now it's France, which is one of the largest economies in the EU that's really under stress right now. And there was a notable headline that said, will the ECB come in and save France's bond market if they need to? And the answer is yes, because I think they have to. And that's fiscal dominance, because even if the central bank doesn't want to, they risk something much, much worse happening.
BlackRock's iShares Bitcoin Trust, IBIT, is seeing a massive outflow of funds, sending shockwaves through the crypto market. Investors have pulled out over $583 million, marking one of the largest withdrawals in Bitcoin ETF history. Given BlackRock's dominant role in institutional Bitcoin investments, this sudden shift has sparked concerns about the overall stability of the market. Reports from Arkham Intelligence indicate that BlackRock has been steadily reducing its Bitcoin holdings within IBIT. Transaction data supports this, showing a significant drop in BlackRock's exposure to the cryptocurrency. This has led to speculation that the asset management giant is rebalancing its portfolio in response to market fluctuations, potentially signaling a change in institutional sentiment. Despite these withdrawals, trading activity on major cryptocurrency exchanges remains stable. Retail investors continue to engage in the market, preventing an immediate price collapse. However, if institutional exits continue, Bitcoin could face increased volatility in the weeks ahead. a long-dormant Bitcoin miner, has finally moved 50 BTC after holding on to them for 15 years, turning what was once worth just $3 into an astonishing $5 million. The unknown miner originally received the Bitcoin in 2010 as a block reward when the price of BTC was less than a dime. Instead of cashing out during Bitcoin's previous peaks in 2013, 2017, or even 2021, the miner chose to wait, witnessing Bitcoin's meteoric rise through multiple bull and bear cycles before making his move. On Sunday at 1746 UTC, blockchain data revealed that the miner transferred the 50 BTC to 2 new addresses, marking a staggering 162 million% increase in value from when he first earned them. The crypto community quickly took notice, applauding the miner's patience and unwavering belief in Bitcoin. Stories like these highlight the power of long-term conviction in crypto and the rewards of holding strong through market turbulence. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.